As of 4:04 p.m. Eastern Time, the markets are officially closed for the day. SoFi Technologies, trading under the ticker SOFI, closed the session at $26.36. This represents a significant intraday gain of $1.12, a robust 4.44% climb for the day. While the closing bell has rung, this final figure sets the stage for what is sure to be an interesting after-hour session and an even more critical pre-market tomorrow. Now, many looking at that daily performance will immediately attribute it to general market optimism, or perhaps some sector-wide tailwind in the fintech space. The prevailing expectation is that SoFi, as a high-beta growth name, simply rides the waves of broader market sentiment. And while there's a kernel of truth to that, the reality of today's move, and indeed the stock's trajectory over the past several months, is far more nuanced. What most observers are missing is the subtle but critical shift in institutional sentiment, which is beginning to treat SoFi less like a speculative fintech play and more like an emerging banking powerhouse. The trading volume today was substantial, but more telling than the raw number is the character of that volume. We're seeing fewer frantic, small lot trades typical of retail enthusiasm and more large block trades, indicative of patient, institutional accumulation. This is the real story beneath the surface of that 4.44% gain. Let's be clear, the common ground we all stand on is that SoFi has been a battleground stock. For years, the narrative has been one of potential versus profitability. On one side, you have the bulls who see a disruptive, all-in-one digital finance super app poised to capture a generation of consumers disillusioned with traditional banking. They point to skyrocketing member growth, the strategic acquisitions of Galileo and Technisys, and the coveted bank charter as evidence of an unstoppable force. On the other side, the bears have consistently pointed to the company's reliance on student loan refinancing, its struggles to achieve consistent GAAP profitability, and the immense competitive pressures from both legacy giants like Fidelity and nimble upstarts available through platforms like Robinhood or SoFi Invest itself. The expectation has always been that one of these narratives would eventually win out in a dramatic fashion. However, the reality emerging from recent financial reports and market activity challenges this binary view. SoFi is not just winning, it's changing the game entirely. The company is executing a complex transition from a high-growth, cash-burning fintech to a diversified, profitable financial institution. This isn't about one segment finally overpowering the others. It's about the symbiotic relationship between its three core pillars: lending, technology, and financial services, finally beginning to fire on all cylinders. The latest earnings report blew past expectations, not just on the headline numbers, but in the quality of those earnings. The blowout wasn't solely driven by a surge in personal loan originations, as many had anticipated. Instead, it was the surprising strength and margin expansion in the financial services segment, coupled with the steady, high-margin contribution from its technology platform that truly impressed the serious analysts. This diversification is the key reality that the market is slowly waking up to, and it suggests a much more durable and defensible business model than the simple growth story expectation would imply. Looking closer at the recent stock movement, the climb from its 52-week low near $8 to today's close is remarkable. This hasn't been a straight line up. It has been a volatile ride punctuated by sharp pullbacks. Each dip, however, has been met with significant buying pressure, reinforcing the idea of institutional support building a new, higher floor for the stock. This pattern is less characteristic of a speculative frenzy and more in line with a fundamental re-rating of the company's prospects. For those managing their own portfolios, perhaps through Schwab Intelligent Portfolios or Fidelity brokerage accounts, understanding this institutional behavior is critical. It signals that the smart money is looking beyond the daily noise and focusing on the long-term earnings power being built. We're also seeing a notable increase in bullish options activity, with call volume consistently outpacing put volume, suggesting that traders are positioning for further upside. Many are likely using platforms like interactive brokers to make these more sophisticated trades, betting on continued momentum. So what exactly does SoFi do? At its core, SoFi aims to be a one-stop shop for its members' finance lives. It started with student loan refinancing, addressing a significant pain point for a generation burdened with educational debt. From there, it expanded its lending segment to include personal loans, home loans, and in-school loans. This remains a significant revenue driver. The second pillar is the financial services segment, which is its fastest-growing area. This includes SoFi Money, a cash management account, SoFi Invest, offering active and automated investing in stocks, ETFs, and crypto, SoFi Credit Card, and various insurance products. The goal here is to get members to use SoFi for all their daily financial needs, increasing switching costs and lifetime value. The third and perhaps most underappreciated is the technology platform. Through its acquisitions of Galileo, a payment processing and API platform, and Technisys, a digital banking core provider, SoFi provides the back-end infrastructure for hundreds of other fintech companies and financial institutions. This B2B segment provides a steady stream of high-margin recurring revenue, acting as the stable foundation upon the more volatile consumer-facing businesses. The future outlook for SoFi is intrinsically tied to this three-pronged strategy, but it's also heavily influenced by the macroeconomic environment. The expectation for many fintech companies was that a higher interest rate environment would crush their lending businesses. For SoFi, the reality has been more complex. While higher rates do present headwinds for loan demand, SoFi's bank charter has allowed it to benefit from higher net interest margins on its deposits, offsetting some of that pressure. A potential future catalyst is a pivot by the Federal Reserve towards lower interest rates. This would likely ignite another boom in refinancing demand across both student and personal loans, directly benefiting SoFi's largest segment. Conversely, a significant risk is a sharp economic downturn. This could lead to a spike in loan delinquencies and defaults, impacting the company's bottom line. The market will be watching credit quality metrics very closely in the coming quarters. Another key opportunity lies in the continued expansion of its technology platform. As more traditional banks and credit unions look to modernize their digital offerings, SoFi's Galileo and Technisys are perfectly positioned to capture that demand, creating what the CEO has termed the AWS of Fintech. It's this potential that separates it from competitors who are purely consumer-facing. Now I want to hear from you. Comment below what percentage of your portfolio is allocated to fintech stocks. In summary, the story of SoFi Technologies is a powerful example of reality exceeding initial expectations. The stock is no longer just a proxy for student loan trends or a speculative bet on the future of digital banking. It has matured into a multifaceted financial services ecosystem with a powerful B2B technology backbone. The daily price movement, like the 4.44% gain we saw today, is a reflection of this ongoing reevaluation by the market. The expectation was a high-growth disruptor. The reality is a diversified financial institution in the making. The path forward will undoubtedly have its share of volatility, influenced by economic shifts and intense competition from players big and small, from Fidelity Investments to the Robinhood app. However, the foundational strength derived from its integrated business model provides a compelling case that SoFi is building a business designed not just to grow, but to last. The narrative has shifted from if they can become profitable to how profitable they can become. And that change in perception is what continues to drive this stock forward. Disclaimer: this video is for educational purposes only and is not financial advice. I'm not a licensed advisor. Please consult a professional before making financial decisions. Investing involves risk. If this helped you, like, comment, share, follow for more.